today's episode of the Daily Dose. Today is Tuesday, November 29th. The stock markets were slightly lower today. The Dow Jones actually finished slightly in the green, just barely, but for the most part, the markets were down today. U.S. stocks edged lower Tuesday as Wall Street continued a sluggish start to the week, with investors continuing to monitor the latest developments related to the sudden surge of protests in China over the government's zero-COVID stance. Stocks finished lower on Monday as protests against China's strict COVID policies had far-reaching consequences across global markets. The S&P 500 declined more than 1%, the first time it did so on a post-Thanksgiving Monday since 2008. The U.S. dollar weakened against a basket of peers following days of gains as the yuan dipped. In oil markets Tuesday, the global benchmark climbed 2.6% to trade above $86 a barrel. Monday's sell-off accelerated following remarks of two Fed Reserve officials who stressed the central bank's rate hiking campaign will continue. New York Fed President John Williams on Monday said there was still, quote, more work to do to bring down inflation. Stronger demand for labor, stronger demand in the economy than I previously thought, and then somewhat higher underlying inflation suggest a modestly higher path for policy relative to September, Williams told reporters Monday after an event hosted by the Economic Club of New York. At another event, St. Louis Fed President James Bullard said, quote, "We've got a ways to go to get restrictive." Bullard also pointed out that the Fed's target policy rates need to rise to at least a range of 5% to 5.25% from the current level of 3.75 to 4%. And that's a pretty big difference. If you're looking at my screen right now, you'll see the federal funds rate all the way back to 1970. And you'll see it really hasn't risen this sharply since the 70s. But we've actually never had back-to-back 75 basis point rate hikes before. And right now we've seen four in a row. So that's pretty aggressive. They've kind of gone back and forth of whether there'll be a 75 basis point or a 50 basis point rate hike. The market right now is expecting a 50 basis point rate hike. But I definitely don't think it's out of the question that we get 75 basis points. And I think in that event, the market would decline dramatically, as that would signal that we are going much higher as far as the target rate than what the market had originally thought. All eyes turn to Federal Reserve Chair Jerome Powell's speech on Wednesday. That'll be tomorrow, though it is unclear what more Powell could say that we have not heard from recent Fed speakers, wrote Andrew Tyler. While a Fed pivot is currently off the table, investors looking for a pause are more likely to find that support from Powell this week. Meanwhile, investors are bracing for a jam-packed week of economic data. Housing data from the S&P CoreLogic Case-Shiller National Home Price Index showed that U.S. home prices fell 1% in September from August, posting a third consecutive monthly decline. The slowdown comes as mortgage rates have surged to near 7% from lows of 3% in just 10 months. The Conference Board's Consumer Confidence Index, the latest indicator of the strength of the U.S. economy, fell to 100.2 in November from a revised 102.2 reading in October, while economists surveyed by Bloomberg called for a drop to 100. Apple still struggling. Their stock's been beaten down with everything going on in China. They're expecting for a slowdown in their iPhone production, and they're also kind of in a spat with Elon Musk and Twitter right now, as they've threatened to take Twitter off of the ad store, and they've also reduced ad spending on Twitter. They're kind of pushing back on Elon Musk for bringing back a lot of really extreme far right-wing politicians back to the platform. They are just one of many companies that have either slowed down their advertising on Twitter or absolutely pulled out. In the crypto world, BlockFi filed for bankruptcy yesterday. and that's just another domino to fall after the FTX collapse. But let's take a look at the stock charts now. I have the S&P 500 pulled up in front of me. For the first time, really, in this trend, we're kind of seeing some weakness come in. So we did have a higher high, but just barely here. We almost touched the 200 moving average, and now we're kind of falling back. I'd been saying that I was expecting some selling right here. I didn't think it was impossible that we went through the 200-day moving average, but I thought it was pretty unlikely. And as of right now, it looks like we're kind of pushing off of it, and we're feeling that selling pressure right now. We're still in this upper range, so there will be some support around the 38.90 for stocks. And then after that, I think we go back to this range where we found our lows back in October. And in the event that we break through there, again, I've been eyeing this range around the 32.50 for the S&P 500, but we're a long way from that. I think that to get in a sell-off that aggressive maybe would require a 75 basis point hike in December, and I don't think that's off the table. So that's what I'm looking at here. We're still feeling the pressure off the 200-day moving average, but there is going to be support at the 38.90 level for stocks, so we're kind of in this little range up here between the 200-day moving average and the support we have right here. As far as Bitcoin goes, it was green today, but it's still looking weak. I mean, if we zoom in on the chart here, it's just been looking weak since we broke through our range that it held up for a number of months. And I'm still looking at it to at least get to the 12,000, if not lower. And I think that a sell-off like that would ensue alongside a market sell-off. And I think that maybe the stocks would have to have an event that pushed them down first for money to be coming out of Bitcoin. So that's what I'm looking at on the markets. I'm going to leave it here for the day. Hope you enjoy. Remember to subscribe on YouTube and follow wherever you listen to podcasts. And until next time, I appreciate you watching or listening, and I'll see you tomorrow.